Warren Buffett attracts more attention than any other investor on the planet, there's no doubt. His purchases can completely swing a particular stock. During the financial crisis, companies came directly to Buffett to ask for a bailout. That's how much of a big deal this guy is. Berkshire Hathaway has not accelerated their purchases like many investors have, and the inflation that has come up has been noted all over the place. The question is, where does he see this going? You came here for the truth, so let me unveil that for you. Today we're going to have our focus primarily on Warren Buffett. We're going to talk about his portfolio, what he has been doing, and what he has said. I think it's important to note not just what they say, but of course what they do. And this goes for Buffett, this goes for all of the big companies out there, because there are a lot of eyes watching this particular individual, just as an example. And while we don't want to trade necessarily on what they do, it's important to put these two together. What did they say was going to happen? What actually happened? And what they did. And if we do that, we can learn the patterns and we can start to understand them. You know that you've got, for example, Charlie Munger. He's talking about in his book, Poor Charlie's Almanac, and you could see how somebody with decade of experience, they put that all together, they write these books, and then you could download that knowledge into your brain. And I'm just using him as an example, but there are so many people out there that we should be learning from. So we could do that actively by doing what I'll show you here, but also we need to read from the best. It is so important, so key, and that's how we stay on top of it all. If you ever want to know what's going on with a certain company, the SEC is always publishing this information. And so you can simply just do a search for SEC. And then in this case here, Berkshire Hathaway, all of the documents have to be filed with the SEC. So you can read through it yourself, get all that information. But the documents are hard to read and so on. So I like to go through the different resources that I have used. I have a video about that, breaking it down exactly how to see what companies are doing at any time. If you go into the playlist on my channel, you will see that it's right there in the e-course section. So this is going to be something that I think you should be aware of. And right here, we have the list as of the last 13F. So that was filed, we're talking about on February 16th, but the data comes from the 12/31. So we're getting it basically as of the end of last year. And so that's the way it works. You always get it in delayed fashion. So you're not going to go necessarily to buy something because that's outdated. You don't want to follow that. But remember, I'm talking about putting it all together. So right here at the top of the list, it is Apple. And you could see the market value at a gargantuan $117 billion. Massive. I mean, Berkshire Hathaway owns a lot of Apple in the percentage, if you see that. And we can go down the list. I mean, you're looking at Bank of America. Now, I just want to tell you, Bank of America specifically, remember that they were actually a company that was failing during the financial crisis. And Warren Buffett, Berkshire Hathaway, bailed out this company. They didn't go to the US government to get a bailout. They actually went in a different route. And of course, he got a sweetheart deal. Got a nice deal. So the government didn't have to nationalize Bank of America. Warren Buffett stepped in. And there were other companies, of course, the same situation happened, and he said no, because they didn't want to get involved with these garbage companies, but apparently they saw something in Bank of America. It's still around today, but we'll move down the list. We've got Coca-Cola, another big one, almost $22 billion in that case. And what this website here shows you, this is Whale Wisdom, shows you the percentage of the portfolio and then any changes that have happened over the period of time. So you're going to get to find out how big this is in the percentage of their portfolio, as well as the company itself. And then we've got American Express. We move further down, looking at Kraft Heinz as well. So this is one company, Kraft Heinz, that has specifically said that because of the increased prices on all the raw materials, we are going to have to increase our prices to the consumer. And so you will see that. And that's something that I'll note in a minute here. But I just wanted to bring that up because a lot of people don't realize what happens. If you take away from the corporate profits, then these companies only have one option, and that is they can hold off for a bit, but ultimately to increase the prices on the consumer level. The consumer will have to pay higher prices, and as Warren Buffett mentions, they've got extra money in their pockets today because the stimulus. But what about if tomorrow there is no more stimulus? Well, what's going to happen? Well, I think it's important to track that all and understand how it all connects together. Berkshire Hathaway's annual meeting, it's something that really they constantly get so much attention, not just from the media, but you've got people packing in like this is a main event, okay? There's generally, thousands and thousands and thousands of people that gather to watch both Charlie Munger and Warren Buffett and others speak at these events. And, what he had to say this time was quite interesting. And I'm going to point something out. So hang on in the comments for just a second. Billionaire Warren Buffett warned people not to think investing is an easy way to make a fortune as he answered questions at Berkshire's annual meeting. Buffett said that it can be tough to pick the long-term winners. He pointed out that in 1903, there were more than 2,000 car companies and nearly all of them failed, even though cars have transformed the country since then. Think about that for a second here. Okay, got to remember that. And he's not necessarily just saying about car companies, he's talking about new technologies coming in and all these companies. Oh, the cars are going to be the future. Cars are going to be the future. Yeah, lots of people have a car today, but not all of the companies are still around. There's a lot more to picking stocks than figuring out what will be an incredible industry in the future. I just wanted to tell you that it's not as easy as it sounds. And that advice alone, that advice is fantastic because it's not about the bull market. It's about when we move through the cycles and people have to be holding on to the best possible names or you lose out. In his suggestion, he talks about simply owning the S&P 500 index fund. In fact, if I'm not mistaken, he had said specifically that when his time is done, to simply take his wealth and put it in the index fund, and that's it. So the whole picking stocks game, in his opinion, is really run its course for the majority of people. We'll see if that's actually the case, but certainly I think people will not be aware of what to do when a bear market comes. Many had criticized what Berkshire had done over the last year, but take a look at this point. Buffett said that he doesn't regret selling off Berkshire's $6 billion stake in all of the major airlines last year, even though those stocks have grown significantly since he sold them last spring. Buffett also said that he thinks the airlines might not have been able to secure as much government aid as they had if they still had a very rich major shareholder like us. That's important to note. He's that big. I mean, if you're talking about Berkshire being there, maybe the government wouldn't have been able to extend as much money their way or wouldn't feel the need to do so. This is something I think is, to note because of what we talked about a few minutes ago. And now on to inflation. I will ask the question right here, whoever wants to take the stage from raw material purchases by Berkshire subsidiaries, are you seeing signs of inflation beginning to increase? Warren Buffett said this. We are seeing very substantial inflation. It's very interesting. I mean, we're raising prices. People are raising prices to us and it's being accepted. I mean, it's not if we get take home building. I mean, the cost of, we've got 9 home builders in addition to our manufactured housing operation, which is the largest in the country. So we really do a lot of housing. The costs are just up. Steel costs, just every day, they're going up. And there hadn't been because of the wage stuff follows. I mean, the UAW W writes a 3-year contract. We got a 3-year contract. He talks about that. He talks about what's happening, and the prices on everything are rising. If you want to check this one out, it's basically, a written statement. I think they had the video there. I didn't watch the video itself, but definitely you could check it out. You could see what he had to say. It is important to note how serious price inflation is today. They tell you it's temporary, but according to Buffett, he just sees more inflation coming down the road. And there's the quote surrounding it. It just won't stop. People have money in their pocket and they'll pay the higher prices. So that's important. That is really important when you think about it, because as long as people have the stimulus money, as long as they have made more money because the home values have gone up and so on, they are willing to spend more money. If that changes, then everything stops. But as long as the money keeps coming in, party on. Berkshire is ahead of the broader market after trailing for 2 years. So you could see that in this case here. And then we have this article out of Market Watch talking about Leon Cooperman. Quote, I suspect the market will be lower a year from today, but I don't have to make that guess now. This is not going to end well. So this individual here, a self-described fully invested bear, that's how he describes himself. He's talking about what's going on in the markets and realizing that something is really out of whack. Now, again, he's fully invested. He's got his money in. He doesn't like where the ending, is gonna be, but he's got his money in. So he's, let's say, cautious on the whole scenario. Quote, I think that we should recognize we are pulling demand forward and that the longer term outlook is not particularly favorable in my view. And there, they talk about the inflation and so on, but it is important, really. It really is. Right here, you could see nobody, myself included, knows where this is going to end. We just watch the things that would normally indicate an end. And you could just see how exaggerated things are today. So you've got people who have decades and decades and decades of experience, and they see how it operates through a cycle. And that's the difference between somebody who just started to invest, because if you look through that cycle, things are not the same all the time. The biggest companies in the world are not the biggest ones when it comes up. So if you, for example, let's say you bought something in this point here, okay, there's a big crash, it comes down, don't worry, I'll just hold and it'll come back up to the top, right? Right? Well, no, not necessarily. During this period of time, how long will that be? Will it be 5 years? Will it be 10 years? Will it be 15 years? All of these are examples that we have seen in the past. And during that period, 10 years, 15 years, what happens to the industry? Look, Amazon in the 90s, it comes out, it started to look strange at the beginning. People are buying books online. How could this possibly be? Then it's catching steam. Everything's really getting hot. And then the stock crashes along with everything else, but the company was still doing well. So the company's doing well, the stock's not doing well. And why? Because of the whole market coming down. Now they came back up. They survived that and they did very well, as you know, throughout this period. But some companies didn't have that same fortune. So you have to be very careful when it comes to investing. This article here out of the Wall Street Journal is just talking about how much money retail investors are putting into the stock market today. Americans are all in on the stock market. Individual investors are holding more stocks than ever before as major indexes climb to fresh highs. They're also upping the ante by borrowing to magnify their bets or increasingly buying on small dips in the market. We should always take the warnings from the individuals who have seen decade after decade of all these different crises and not buy what they buy and not take the actions that they do, but simply listen and learn. I think it's pretty obvious that throughout a cycle, they're always going to find that there are winners and losers in their portfolio, and many of them are simply choosing to go the passive investing route. Now that becomes extremely difficult to hang on to when everybody else is selling. They're trying to exit through a very narrow pathway. That's the difference between having a wide portfolio of actual individual stocks, perhaps even geographically dispersed, or you try to all go into the same S&P 500 index, or you're looking Vanguard products and so on. This is difficult on the way out. Now, it has a lot of liquidity. There's so much money in them, but if everybody's going for the exit, the price is going to look really, really messed up for a period of time. So I think people should just be aware of where their money is at. They should be diversifying their portfolios in a way that basically allows them to manage risk properly. Okay, no matter what you've got invested, you have to hedge your bets. Always hedge your bets. Always place, stop losses. Always have money in a place that you think, okay, it may not perform the best, but perhaps the downside risk is lower. All these things should be taken into account. To finish off the video, from John Kenneth Galbraith, if you want to read his book, the Great Crash of 1929, I believe it's called. Quote, "What we do know is that speculative episodes never come gently to an end. The wise, though for most, the improbable course is to assume the worst." Very true. And at the bottom there, neither regulation nor memory is a perfect protection against the will to delude oneself or others. If people are sufficiently persuaded of their own wizardry or that of others, they and their money will be separated. Really good stuff there. I just wanted to touch on that. We'll finish off the video. If you found it informative, hit that thumbs up button. When you do, you're supporting me. I want to thank you for that. If you want to get a completely free course on how to sell stuff online, you can get it at the AmazonGPS.com. If you want to learn about the financial system, the central banks, interest rates, everything to do with that, is located in my 2 books, and you can get them at the link in the description below. And if you haven't seen this video yet, it's about inflation. We're talking about that subject a few minutes ago. It's all right here broken down. Click it and I'll see you there.